accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hey, everybody. Welcome to the Coach's Playbook. We were talking about something we may hear about later in the show right there. But overall today, we're going to be talking about why it might not be such a good idea to trade crude oil right now, with some examples and some just talk about it. First, Mick, do we have any trader shout outs today?
We've got a shout out. Shout out to Ryan Shanter. He's up about 3,600 trading the NASDAQ right now. Keep it up.
Yeah. And I kind of wanted to open this episode today with just some, it's not really a caveat, but obviously anyone watching this and all of us know that there's very serious stuff going on between Russia and the Ukraine. And because presumably you're not coming to us, or if you are, you're mistaken in coming to us for logical thought and breakdown of what's going on there, we don't want to seem like we're, I don't know, not giving it the weight or something like that. But at the same time, we're going to talk about this mostly through the lens of trading and commodities. It doesn't mean we're taking things lightly or stuff like that. We just don't really know what else to do. So go somewhere else. And I encourage you to, for actual news about the conflict. So that out of the way. Anyway, this was something that came up today, but we could have done it last week or the week before too, is a lot of retail traders are probably looking at this volatility in crude oil right now and thinking, maybe I'll get a piece of that. And I think we wanted to talk today about why it's probably not the best thing to do. So Dan, I think you initially suggested this. It was originally, we were just going to talk oil, but then the more we thought about it, we're like, no, we shouldn't really be like encouraging people to get in there. So Dan, lay out your thoughts.
Yeah, I mean, first and foremost, this crude oil, it's the elephant in the room. I think you're seeing it everywhere. Doesn't matter if you're a trader or not, if you're over 16 years old and you're filling your car with gas, if you're booking flights, you're seeing costs of everything kind of going up around it. And it's a little concerning. We're the highest prices ever with the national average in cost per gallon of gas. I'm very fortunate here in Wisconsin. We're only $3.89. But it's on everyone's horizon. And so what's going on over there? You got a lot of concerns, right? We saw this with equities, with everything going on. You started to see concerns. You started to see the markets factor that stuff in. Well, now we're trading crude oil. We're at $125-ish a barrel. And we're seeing swings, and we're not just seeing like what we saw a couple months back, maybe a year ago, where we're up and down 80, 90 cents in a day, which is very tradable, right? If we're trading 80, 90 cents, you can kind of take advantage of good moves. You can cover your risk. You can be protected. But right now, when we're seeing these markets move $10 simple in a day, that's where you have to start being concerned from a trading perspective. It's enticing. It's exciting seeing these markets move, because a lot of people, especially newer traders, when you look at this, you get the dollar signs in your eyes. You think about profits. Trust me, I get it. I see the same stuff, but I also see a little bit more. And I have to think, as a trader, as a money manager, as a investor, as in any aspect, we have to think about, wait a second, not just that the costs or the profits are going to be increasing. Our risk is exponentially increased. So let's just look at it in a simple perspective. If the market moves $10, where historically it was moving $1, if we're risking 10% of a daily move, that's $100 in crude oil. Well, now that's $1,000. So the costs of doing business are going to go exponentially higher, and you have to plan for that in your risk. You can't be trading now like you were trading 8 months ago when the market was in much tighter ranges. So you're increasing your risk. And so to trade crude oil, you got to have a ton of money and you got to be conscious of that. It's not the same style of trade.
Well, case in point, Dan, as you mentioned, probably because you just looked at it a little while ago, you mentioned that it was in the $125 range. I was going to point out that it was $120 right now at the beginning of your not rant, but talk there. And now it's at 121.60. So it's up a little bit.
There's a
off it.
$1.60 move, and the time it took me to put Hogue to sleep over there.
Exactly.
I'm looking at my quote board and watching it jump, 20 cents every single tick.
Well, let me pull up. Dan, can I share the chart? Just
Yeah,
so
you
we're
can.
okay, cool.
Jack, one thing you said is right at the beginning here is you'll be a retail trader. You probably don't have the experience in trading in these kind of markets. You're trying to get your bite. Be careful you don't get bit.
Absolutely. So as we always start, before we dive in deeper, Dan, you mentioned the cost too. It's just if you're a retail trader. Also, what's interesting about crude oil, I think a lot of our traders are mostly doing equity indices. And by nature of the equity indices, because I'm going to talk about margin requirements right now. So Mick, do you know off the top of your head? I know the crude oil margins have exploded. I think I saw today it was like $12,000 to hold a contract overnight or something like that.
Maintenance.
Maintenance.
Yeah, I was going to pull that up. I haven't looked at it in a little while, but I can get those for you. Get you initial margin
And Jack, we're looking at
here in a second.
This is the daily. So
this is the daily.
This is the daily because I wanted to show like it's always fun. Like anytime that I get the chance to let me see, I can condense this to show this negative move here. Remember that? I have to, but we'll zoom in further. But you can see just
May
how,
contract.
Yeah. So like you can just see this explosion. I'll make it more to zero here like this. But this is what's been going on lately with these big all over the place moves. Now, what I want to comment on about margin is if you're trading in any account, it's just making it more expensive to trade. And unlike equities, the dynamics of the equities market and margin is related to two things: the volatility and the nominal price.
Mm-hmm.
And in equities, those tend to counteract each other. So like during COVID, for instance, when the market crashes 40%, volatility has skyrocketed. So margin's going up because of that, but it's another force is bringing it down because the nominal contract is worth 40% less.
And nominal contract, the underlying value of the futures contract.
Right. So like at 4,000, the nominal value of E-mini is $200,000, right? But if the market went down by half, it would only be 100,000. So that counteracts that effect. With oil, it's the opposite, because generally, if there's a huge volatility spike in oil, it's going to be to the upside. So you have the nominal value of the contract increasing and you have the volatility increasing. So it's just an expensive margin product to trade. But really, I think what we want to talk about is the volatility. And what sort of time frame do you want me to switch to on this chart?
Let's pull up a 30-minute or an hourly.
Let's do an hour.
So, I mean, you got gaps, opening up with gaps, closing the gap pretty closely. But what I think is important here, Jack, look where the close on the gap, where the market closed before we gapped up, $116. We opened up over $120 a barrel. So you're looking at $500 a contract right there, just as soon as that market opens up.
5,000?
Excuse me, 5,000. Excuse me, 5,000. So when this market opens up, you're already, chances are it could be against, you could be for, and it's moving that drastically from in an overnight session. Once we opened up here, overnight session brings this thing all the way back down to 116 and then rallies up to 128. So you got $12,000 in moves there that you have to think about what's my risk in every trade. And then you can't trade it with 10, 20, 30 cents of risk. To trade this market in a way that's going to be successful, you're risking thousands to try and take advantage of moves.
Absolutely. I guess our first piece of concrete advice is it's psychotic from either side to be holding an outright oil contract overnight at this point. I hope you're not doing that anyway. Unless
you're long that May contract back in 2020.
Yeah. So Hogue, you've seen a lot of different markets along the way. How does this compare to some of the more volatile issues you've seen?
Well, it always seems that when volatility strikes, there's a different kind of impetus to it. Most of my experience in volatile markets is in the S&Ps, and we know we've seen our share of volatile markets in that. As a new retail trader, it looks like there's great opportunity, as everybody has mentioned so far. But that opportunity also comes with greater risk. You have to be prepared to withstand the greater risk to be able to be successful at all in markets like this. The other thing is, volatile markets, when the price is moving a lot, it has a tendency to incite action, especially from less experienced traders. You start to think that there's so much action, there's so much I'm going to be able to make, there's so much opportunity here. It lends itself to over trading, some serious over trading at that. Now, in the S&Ps, I've been through some volatile experiences. I've over traded and I've under traded. If you're going to be trading in markets like this, I highly suggest under trading. Be very patient. Let the market come to a level or a situation that allows you to limit the risk. You're going to have to risk more because the volatility is more, but let the market come to a position where you're going to be able to limit the risk. It's almost like remaining patient enough to wait for the opportunity for the market to say, here it is. If you're going to be trading it at all. I am not a big fan of big volatile markets. I'm extremely patient. I may not trade for days until a situation arises that I have to take, and it's going to be cheap as it can be in volatile markets, and it's going to be an asymmetric opportunity where the risk is small and the reward is great. My suggestion for less experienced retail traders: be engaged, trade in a practice account, be purposeful in your practice, be deliberate in your practice, act as though it's for real. I know it's hard to kind of manufacture that in your mind while you're practicing, but it's the only way you're going to get better and understand the next time there's a situation where there's volatility in the market, you're going to be much better prepared to respond in ways that are beneficial to yourself. You get into a situation, all of the patterns that you've been leaning on are no longer going to be there. It's a whole new, it's a whole new list of questions that the market is posing to you, and the answers are going to be different. It's the thing about markets is they're changing. Once you get the right answers to the questions, the market's going to change the questions, and you're going to have to come up with new answers. To do so as quickly and as accurately as you have to when volatility hits is something that takes years of experience. And like I said, I have years of experience. I don't like volatile markets.
Yeah, I like trading fast markets, but this becomes something else. I ran into over this past weekend some former coworkers of mine who have actually started their own shop, and they're trading some of the similar strategies that we used to. And so they're not trading outrights. They're not even trading spreads, really. They're trading butterflies. So you're trying to be hedged curve and outright risk. And the guy I talked to said they were getting lit up on this and had to stop. So even if you're professional with a lot of experience, I mean, the problem is all trading comes back to, your levels and order flow and stuff like that. But that gets trumped by massive headline risk, where I don't know how you could have a trade on this and feel at all confident that I don't know how you'd begin to assign a probability of what's working out there. Because we could see, for instance, from the last hour, this last bar on the chart here, that's an $8 hour bar we see there.
I was going to point that one out. I mean, you can see that in the last 45 minutes, we've run from 128 down to 120. That's $8,000 on a one lot.
And that's after the president says we are going to embargo Russian crude oil.
And I'll tell you what, people who are long and probably felt pretty confident here, but it's the buy the rumor, sell the news. When you look deeper, I was talking to Hogue before this. My eyes, if I was going to be macro, are on what the EU does, because we're banning Russian oil imports, but the U.S. doesn't really import that much oil from Russia. I think I'm pretty sure it's something like
600,000 barrels a month.
it's like a couple percent of our imports, right? So it's not even like a couple percent of our oil.
Mhm.
You know, 600,000 a month at $100 a barrel. Hope I don't mess this up. Would be $60 million. Am I doing that right? This isn't. It's not a lot. So I'm not surprised that didn't like shake the markets around, right?
I was going to say something, and now I had a brain fart.
I'm just getting mesmerized by this chart right now, to be honest.
I mean, at the end of the day, like the guys that I know that are trading crude oil or that are successful crude oil guys, they're extremely hedged. There's one guy in particular, I'm not going to say too much, but he's one of the largest crude oil traders in the world, between crude oil and natural gas. He's got his entire team. He has a team of about 15 people that hedge his position, and they're trying to get as flat as humanly possible with all of this. Like, this is one of the biggest guys in the world trading crude oil, and he's got a team sitting on their hands
Hedging.
that are hedgers, just hedging his position. He's telling them, our job right now is to get as flat as possible. Like, this is not a game for a retail trader right now. I don't think there's any other way to put it.
Yeah, and I think that these big swings are being caused. Like, I'm not an oil trader, but I know it's one of the biggest institutional hedging markets, because everything from like Southwest Airlines to the physical commodity traders to the companies, think like Enron, but not like Enron, are all hedging their oil exposure, right, all the time. And I would have to assume that these huge swings in a lot of ways are mostly fueled by hedging activities. I could be wrong. Does anyone have more experience with the makeup of this market?
Well, and don't forget, we're coming into rollover. So that certainly throws a wrench into directional activity for the bigger, stronger, longer time frame traders.
Yeah. And Jack, to add to that, I think you're spot on. I mean, you think about it, there's BP. I'm in a group with them. I know a bunch of guys that trade for BP oil. They're doing a ton of hedging right now. And that's just one oil distributor, right? You've got hundreds of them around the country, these massive teams of traders. You know, you don't think about BP being a large oil trading company. Well, they're massive oil. They have a massive oil trading team. You got BP, Mobile, you name it. They all have teams that are now trading these positions and building out hedging on them. So these moves are very small retail, if any retail at all right now.
Well, not to mention, you probably have some participants in here that I don't want to name certain sovereign nations to put them on blast, but you definitely have people that can, shall we say, can influence the price on their own should they choose to do certain things. And I would not put it beyond them to make a lot of money here. It's just the nature of things. I mean, I'm not saying they would, but like, let's take like, I'll say it, what the hell? Like Russia, for instance, they're not doing well for money right now. They could short a bunch of oil futures and just like announce a ceasefire or something like a bunch of other countries could do that too. Saudi Arabia.
Yeah, there's a lot of manipulation potential here on a grand scale.
Yes, that none of us, that's above all of our pay grades, and is yet another reason why I guess our takeaway is just sit out unless you have unless you are just, I don't know, unless you're able to go full Rain Man or something like that and you have some amazing strategy. If it works, it works. But maybe try and look at a different market right now.
You say full Rain Man?
Yes. The Dustin Hoffman and Tom Cruise movie.
I like that.
Phenomenal.
Yeah, great movie there.
7 minutes to Wapner. I'm a very good driver.
Yes. Jeopardy. I tried out for Jeopardy once with my mom. That's a story we'll save for another time. Thankfully, they never filmed it. They were going to do Parent-Child Jeopardy, and we got through to the round where we were actually got to play the game, right, against other parents. And I'm so glad that they decided never to film Parent-Child Jeopardy, because it would be the most embarrassing thing in the history of the world. So,
we'd be sharing that with everyone, Jack.
Yeah. Are there any products that you are taking a closer look at in this? I mean, equities are wild. We're more used to it. I'd still kind of be sitting back right now, but Hogue, any thoughts?
Yeah, equities, there's some opportunity. We, recently, well, as recently as yesterday, broke out of a balance area that provided some decent downside opportunity. I think we ended up getting a little bit too short in the hole today. The market that really had caught my eye this morning and for the last couple of weeks has been gold, because the auction process has been very healthy to the upside, and we're seeing that benefit each day, and especially today, a pretty big move to the upside in gold. But you can see as we get closer to the end of February into the beginning of March, all those up days were on pretty good volume and with a lot of open interest increases. Crude oil's the other way. We're not bringing in big volume and we're losing open interest on the big up days. That's not necessarily healthy for the auction process, but crude oil is, much more built on emotion right now. And if that emotion starts to fall off, we could see a pretty significant pullback on that, because of the auction process isn't really supporting where price is now. It's fear that's supporting price right now. But as far as gold is concerned, with inflation and everything, it's the greatest store of value. The tea leaves underneath gold are much more positive than even the tea leaves under crude oil right now.
Right. So you have like a secondary reason for that run versus crude oil. I wouldn't feel comfortable on either side of this trade because it could explode or the rug could get pulled.
All about emotion.
Yeah, and you could be dead right on on the direction too, but timing wise, I mean, you could watch it, break against you, $6 or something like that, be wrong, be right on the timing, be right on the direction, wrong on the timing, and, and go for broke potentially.
Absolutely.
Joe, so just to follow up here, looks like margin on crude's a little over 11 grand right now. Initial margin, maintenance margin, another 11 grand. So excuse me, guys, my throat. So we're talking a lot of money to, participate in this market. I mean, I remember when I first started trading back in 08, I spoke with an old boss of mine who I worked for, and he's like, you need a couple $100,000 to, trade a soybean contract at the time. It was when grains were going crazy. And I think, right now with the crude oil, you need $100,000 in your account to trade a one lot. I mean, whether it's margin or the risk, like this is not a market for retail traders. And this is as we've discussed, it's a darn difficult market for the professional trader too. I think, it's exciting to watch. Back in 08, when I did start trading, it's when crude oil did have its big bull run up to $145 a barrel or something. And I remember, we'd have the limits back then were $10 a barrel. And if you lock the limit up, for 10 minutes, they expand the limits another, $10. And I remember we had days where it was close to $30 moves in the crude oil. And, it would rally $4 and then pull back $2, so we're talking massive swings. And this is really reminiscent of that to me. I did trade crude oil prior to that run up, a little bit of the way of the run up, but then, you can't trade it. You got to sit on your hands, and it's just, it's a wild thing to watch. I remember, Jack, you were talking about your friends that used to work with, not even doing calendar spreads, but they're doing the butterflies. I mean, I remember seeing the crude oil spreads, from one month to the other. We were having $25 moves in a day, and this is just, it's insane. If you make any money trading during that times, you have to chalk it up to a little bit of luck, in my opinion. And if you lose money, well, you knew that risk, or you should know that risk before you take it. So I think it's really something to, watch out for. And to speak to the margins and these wild swings and the gaps and everything like that, I was just looking while we were filming, I was looking at the commitment of traders from last week, and, open interest isn't that high. So we don't have a lot of people holding on to these contracts, on a overnight or weekly basis. So that should tell you something there too. And that goes for institutionals, large speculators, small speculators. So, there's not a lot of people hanging on to stuff. Speaking of grains going bananas and needing a lot of money in your account, I'm looking at the wheat market right now. It's down 9%. It's down $1.17 a bushel. This is a market that for, I think, I think we had limit moves about 8 days in a row, and we were up at 1.85 cents on the day, and now we're down. I don't mean to pivot away from the crude oil, but just wanted to point out another market that's going crazy. And, we really just need to, sit on our hands. This is like Hogue was saying, he doesn't like volatility. These kind of moves in, this crude oil market, it's nothing that I personally have an appetite for. And, like Hogue said, experienced traders like really want to stay away from this kind of stuff. It's a lot of risk, and maybe you get rewarded for that risk, but in most cases I just don't see it panning out for a lot of people.
Yeah. Well, just be sure to have your stops in. So Dan,
we just got some clarity real quick. It's 600,000 a day. We said month, so we got corrected on that one. So thanks for letting us know that one.
About 7% of our crude oil comes from Russia.
That sounds more like it. So $60 million a day. I thought that was low.
Yeah. That makes more sense. And then Tony's got a quick question. He goes, there's a micro oil contract. What do you guys think about trading that instead of the standard CL? I'm going to sit here and say the volatility is the same. I don't think it's worth touching either of them personally.
I mean, if you have a gun to your head and someone says you need to trade crude oil today and you can trade an E-mini or a micro, I do the micro, but it's still like, they're fungible contracts. You're just making the same bad decision on a smaller scale. So I would probably stick away from that as well.
Yeah. When volatility is high, I mean, you don't need the leverage. Like, I go back to the grains, like corn trades at a little bit of a lower price than the wheat and the soybeans. Like, I know a lot of people that spread that stuff, they might do 2 corn for every wheat contract or something like that.
Yeah.
Like, it's always a good idea to deleverage when there's volatility and uncertainty. So, whether it's the mini crude or micro that was mentioned, it's good to scale back if you do want to participate.
And this isn't even trading, but also like if you want to speculate on it and you have the money and you say, I think this is going to collapse and I'm willing to, make $5,000 or lose whatever it is for you, and you're going to let this ride for a while with a micro, only if that's a good decision for you. But I would say that that's more of a hot take than a day trading thing. So Dan, I think we've come close to time here. Do you have any words to get us through this?
I got a quote for us. It's going to be a little lighthearted. On the direction of crude oil here, I'm going to quote one of my favorite people out there, Larry the Enticer. Just going to send it, boys.
Yeah.
Honestly, there wasn't much out there. I was trying to look for something that relates to a quote around volatility. I mean, really, that's what's going on here in crude oil. It just wants to continue to go. You got to be careful.
Yeah. Are you silly? Of course I'm going to send it. Cool, guys. Well, thanks for stopping by for this discussion. We'll be back next week with a new topic. In the meantime, there's group coaching at 1 p.m. on Mondays and Wednesdays with Hogue. We're doing Make Hogue's Money at 8:20 or thereabouts. It's just after the forecast on Thursday mornings. So go there and you might be able to help us make some real trades and see if we can make Hogue some money so that he can get what do you need right now, Hogue? The rest of that Pontiac or
no, just figure out we can make some money. It's a lot of fun. I don't have to make the choices. I just kind of say, okay, this is what we're thinking about doing. Do we vote and we do it? We made about $150 on last Thursday trading the minis off the open. A lot bigger opportunity, but we at least we started off on a good foot.
Excellent. Well, Dan, can I unshare my screen right now?
Yes, you can.
All right, here I go. Just wanted to make our faces big so we could say goodbye. We'll see you next week. Stay safe out there and trade well.